Hello traders, welcome back to the channel. Take a look at these three figures. Can you identify what these highlighted areas are and how they are different? Just write down your answers in the comment box. So the first figure shows a fair value gap. The second one displays an inverse fair value gap, and the last figure portrays a balanced price range. Now, if you have got all three right, congrats. At this point, most of you will have a good understanding on what a fair value gap and inverse fair value gap is. What is left is the balanced price range. So in this video, we are going to learn exactly that. I will help you understand what balanced price ranges are, their formation, identification, as well as their use in the market. Balanced price range or BPR is one of those critical concepts that can aid your understanding of the market and help you find trade opportunities. This is a very useful SMC concept that can complement your trade entries. So watch this video till the end to get a proper grasp over the entire concept. Make sure you like this video, and if you haven't subscribed to the channel yet, please make sure to subscribe. So without further delays, let's get going. We will begin with defining what a balanced price range is. So, a balanced price range is a concept closely related to fair value gaps. To understand a balanced price range, you need to have a decent idea on what a fair value gap is. I have talked about fair value gaps and imbalances in multiple videos. I recommend anyone with zero knowledge on fair value gaps to watch the second episode of the first season of the SMC course. Please go back and watch that video before proceeding with this episode. A balanced price range or BPR in SMC trading refers to a specific market condition where the price exhibits a quick upward movement followed by an equally rapid downward movement, or vice versa, where there is a quick drop in the price followed by a rapid upward movement. These rapid price movements leave behind imbalances in price action. More specifically, a balanced price range is the area on a price chart where two opposite fair value gaps overlap. In this case, you can see a bearish fair value gap formation, after which the price retraced back strongly, forming a bullish fair value gap on the way up that overlaps with the bearish fair value gap. Similarly, this is another case where a bearish fair value gap overlaps with a bullish fair value gap on the way down. Just like normal fair value gaps, when the price revisits these areas, price often reacts strongly, making the balanced price range a crucial area of interest for trading. Normally, the price fills this gap before moving in the same direction as the last price movement. For instance, in this case, price could come back and fill the balanced price range formed and then continue to move higher. Now, you could ask me, why is this concept important and why should you learn this? Well, the importance of a balanced price range lies in its sensitivity towards market price movement. When the market approaches a BPR, it often results in a quick and significant price reaction. Before continuing a market movement, the market frequently retests the BPR. This retest is a critical moment for traders to identify potential entry and exit points. This price reaction is primarily due to the presence of two overlapping fair value gaps, which attracts the attention of a lot of smart money traders who can influence market direction. ICT SMC is a very popular trading strategy, especially in the forex markets. So their actions in these areas can significantly impact market direction. Now, let's move ahead and learn to identify a BPR properly. Basically, identifying a balanced price range on any chart involves two key steps. As I have mentioned earlier, this process involves recognizing fair value gaps on both the buy and sell sides of the price. So start by identifying a fair value gap on the sell side of the price. As you might have already guessed, this bearish fair value gap will appear when the price drops quickly, leaving an imbalance between the lowest price of the first candle and the highest price of the third candle. Next up, find a fair value gap on the buy side of the price when the market rises rapidly, creating a similar imbalance. Once you have marked both the fair value gaps, the second step involves looking for a common area where these two fair value gaps overlap horizontally. This overlapping zone is known as the balanced price range. It is the region where the bullish and bearish fair value gaps coincide, thereby indicating a balance between supply and demand at that price level. This indicates efficient price delivery, meaning that the market has effectively filled the imbalance and is likely to respect this BPR area as a strong support or resistance zone. Now, just like the other SMC zones, the BPR also has two types. There is a bullish and a bearish BPR. Let's quickly take a look at each one of them and understand how we can use them for our trades. We will begin with a bullish BPR. A bullish balanced price range is identified on the buy side of the price, and it acts like a region of support for future price movements, which can be used by traders to enter into long trade positions. Now, let's figure out how to take trades using a bullish BPR. So, to trade a bullish BPR, you have to look for bullish market structure on your higher time frame chart where the price is forming higher highs and higher lows. This higher time frame will depend on your trading style. It could be 1 day, a 4 hour, or a 15 minutes, or any other time frame. Let me consider a 15-minute chart. The second thing you need to look for is a bullish PD array within this higher time frame bullish price leg. This could be a bullish fair value gap, a bullish order block, or any other area of value where the price could form a strong rejection. Now, if this internal range liquidity is found within the discount zone, the better it is. Now, when the price approaches the bullish PD array, you need to switch to your lower time frame chart for identifying a market structure shift in this time frame. Here, I have considered a 1-minute chart to see whether there is a market structure shift from bearish to bullish. After you identify a market structure shift, look for a bullish fair value gap which is overlapping with a bearish fair value gap. Now mark the overlapping area. This is the bullish BPR that we are looking for. Now wait for the price to test to this BPR area before you execute a long trade entry. You can place a buy limit order at the high level of this BPR, or you could take a limit entry at the 50% of this BPR level. You can set the stop loss below this BPR, or you could place it below the recent swing low formed before the LTF market structure shift. For setting your profit targets, switch back to your higher time frame and place your target near the next draw on liquidity. A similar approach is applicable for trading bearish BPR. Let's quickly look at this. So a bearish balanced price range can be identified on the sell side of the price, and it can be used by traders to initiate sell trades or short positions. Just like the previous case, in order to trade a bearish BPR, first you need to look for a bearish market structure on your higher time frame chart. Secondly, you need to identify a bearish PD array like a bearish fair value gap, bearish order block, etc. within the higher time frame bearish swing leg. It is better if this internal range liquidity gets formed in the premium zone of this price swing. Anyways, when the price approaches this bearish PD array, you need to switch to your lower time frame structure. Then you need to check for a market structure shift from bullish to bearish. Now, if you identify such a shift in structure, I need you to look for a bearish fair value gap which overlaps with a bullish fair value gap. This overlapping region is our bearish BPR. Now, you have to wait for the price to test this BPR area before you execute a short trade entry. You can place a sell limit order at the low level of this BPR zone, or you could take a limit entry at the 50% of this BPR level. You can set the stop loss above this range, or you could place it above the recent swing high formed after the lower time frame market structure shift. For setting your profit targets, switch back to your higher time frame and place your target near the next draw on liquidity. I hope things are clear. So this is all you need to know about balanced price ranges, and in the next episode, I will talk about the power of three concept, which is a very common strategy that smart money uses to manipulate retail traders and hunt their positions. So stay with us to find out. Meanwhile, if this video was informative, kindly hit the like button so that the YouTube algorithm knows that you're interested in these type of videos. And if you have any doubts or suggestions, do mention it in the comment section. Also share this video with your friends and fellow traders. And if you're new to this channel or you have not yet subscribed, please make sure to subscribe to help us complete the 1 million goal by the end of 2025. I will see you guys in the next episode. Till then, bye.